Most traders are losing money not because they can't read charts, but because they don't know what direction they should actually be trading in. So in this video, I'm going to run you through exactly how to develop a high time frame bias so you can stop guessing and start aligning your trades with the real momentum of the market. So just for starters, I want to state that directional bias is the first step to any successful trade, and it's not just the process of finding where the market's going to go over the next 5 minutes, but more so where it's going to go over the next day, week, or even month. So to keep this simple, I've broken it down into a 3-step framework. So step 1, you want to jump in and identify the weekly order flow. So you start by identifying the direction of order flow on the weekly time frame. Now to get some perspective on this, you want to zoom out and observe if we are in an uptrend, a downtrend, or just a consolidation. There's no need to overcomplicate it. You should be able to see this fairly easily. So if we look at the current chart example I've got here, if we zoom out, it's pretty obvious to see that price is heading to the upside. Then you want to go on and locate the most recent or relevant fair value gaps. If price is respecting bullish fair value gaps, then order flow is bullish. If it's respecting bearish fair value gaps, then it's bearish. So again, on this example here, it is very obvious to see that we are respecting bullish fair value gaps, so we are bullish. Now moving on to step 2, you want to identify the draw on liquidity. So now that we have a brief understanding of the weekly direction, we want to identify the targets, also known as draw on liquidity. So you want to mark in areas where liquidity will be resting, that price can be drawn to. This will be structure highs or lows, relative equal highs or lows, or even trend line liquidity in some cases. And remember, if we are bullish, we want to mark in liquidity zones that are above price. And if bearish, we mark in zones that are below price. So again, looking at this chart here, we're moving to the upside. We want to mark in any relevant major highs, which is quite clear. We have the high right here. Now, I'll also note that it's not to say that we are targeting these areas for individual trades. It's more so for the purpose of getting perspective of where price is drawing towards. Step 3, so you want to start getting into daily market structure and order flow. So in this step, you want to mark in your key structure points, such as your higher highs and higher lows if you are bullish, or your lower lows and lower highs if you are bearish, and any market structure shifts that have occurred as well. So looking at this chart here, very clear we have our higher high, higher low, higher high, higher low, and looking to make a new higher high. But I will state that this won't always keep you on side with the market. It isn't always enough. Now, the main reason I say this isn't always enough because price action will often create false breaks or liquidity run to then run in the opposing direction. So let's get into what I mean by this. So we know that orders are generally resting at structure highs and lows. So we want to look at recent price action, usually over the last 2 weeks or so, to see if any structures have been taken out, and if so, how did price react? So when the structure was taken out, did it continue distributing in the same direction? Or did it simply collect those orders and then distribute them in the opposing direction? And this is going to tell us the intention of where price truly wants to move. So looking at this example here on the daily time frame, you can see that we have this minor uptrending structure. We have our higher highs and our higher lows. And you can see what price is actually doing is it's dropping down below the old higher lows, collecting those orders and then aggressively distributing them higher to create new higher highs. So when we see this sort of formation, it is a massive green flag that price is going to continue in that same direction because that's where all the orders are being distributed towards. So now that we've run through that step-by-step process, we'll put it all together and analyze this Euro USD chart here. So step 1, we want to identify the overall direction just by zooming out and getting some perspective, which we can clearly see this is moving to the upside with this higher time frame direction. So now that we've determined that, we want to identify the weekly order flow. So are we respecting bullish or bearish fair value gaps? In this case, it is very clear to see that we are respecting these weekly fair value gaps. In this example, we've actually just maintained the base of that gap. So still looking for further upside. And then moving on from that, we want to identify the draw on liquidity, which is going to be this major structure high as our primary target that price should reach towards if we are going to continue following that uptrend. And now we drop down into the daily time frame to determine daily market structure and order flow. In this case, we are actually bearish. We shifted daily market structure down here, started creating lower lows and lower highs. And this is a really good example of how you would actually combat this situation. So the weekly time frame is obviously extremely bullish, respecting bullish order flow, and the daily time frame is bearish. So in this case, you want to refer to the strongest time frame, which is the weekly. So the weekly is the high time frame, is going to hold the most weight. So in this case, I would continue looking for bullish trades for the following week, even though the daily is bearish, because you will expect the daily to eventually shift and follow the weekly direction. And now if I play this forward for the following week, you'll see that price pushes up, shifts daily market structure bullish, and then continues reaching up to the upside for the following weeks. until it eventually reaches that major draw on liquidity that we're speaking about. Now in this example, I didn't address advanced market structure because it wasn't relevant in this case, but in the following week as price began expanding away into that draw on liquidity, it actually was. So you can see here that we've been creating these higher highs and higher lows once we shifted that market structure. And if you look closely, price actually dropped below an old higher low, collected the orders below there, and then distributed them aggressively to the upside. So as soon as I saw that, that was a massive confirmation that it's going to continue heading in that direction and ultimately reach into that weekly draw on liquidity. So that's it for this one. If you did get value from this, be sure to like and subscribe. I do post a lot more educational content on my Instagram at JadenDowFX, and I'm going to be putting a lot more out here on the YouTube as well. So keep an eye out for that. And if you do have any video suggestions or questions, be sure to leave a comment below.